ultimately, let me come to you. Like Machidi was quoted as saying that the regulatory changes that was made by the central bank is one of the reasons why it recorded not too impressive figures. But don't you think that brings to bear the issue of having to, move to what is called traditional banking, as the case may be? Because if you have to depend on public sector deposits to really do business,
yeah,
and now that the central bank is saying no, we have to keep more of those funds. What does that tell us?
You said it right, because looking at it critically, I think the most important thing we need to note here is that the banks have not been doing the regular banking that they're supposed to do. First of all, they depend so much on public sector funds, and now that they are telling them that they can't earn income on that particular fund, becomes a problem. Then secondly, where they have been earning majority of their income has been through the purchase of treasury bills, or any other instrument, rather than actually lending to end users of fund. And now that there is a problem with that, to me, I believe it is the CBN that has given encouragement to this over the years. Ordinarily, it should have even been 100%. 100%. The public
Cash
sector
requirements.
Yeah, should have been rather 100% for public sector funds. So at least they will go and see how they can mobilize fresh fund, those ones that can actually stay and be sustained, and be able to lend it to end users of fund. So I think maybe what is happening now, I don't know why it's been First Bank FBN Holdings alone that has been crowing foul the loudest. Because all along they've really been complaining, and so some other banks have really made adjustments and have gone ahead.
Okay, we're actually going to look at one other bank on the show, and before we move to other companies, and that is Sky Bank. I know that because of our time we need to move a bit fast. Sky Bank also posted some not too impressive figures. I don't know what's going on with Sky Bank. Maybe you should just let us into some of the stories that are not really on the front pages of the newspapers.
Yeah, Sky Bank is not is not being in your top bracket, but I think that Sky Bank has done very well penetrating the public sector, very well. I know that most of the payments coming from the
state government
to state governments, coming from the public sector to contractors in Abuja, oftentimes come through Sky Bank. So Sky Bank has been a big player in the public sector domain. So it's not going to. I'm not going to take it away from the fact that I haven't played heavily in that sector. Now with what we're seeing, it's not going to be too far from the results we've seen, that they have also been taking a big bashing from the restriction
on public sector deposit. And I think that because of what is going on in the banking sector now, we've seen, still getting back to what Machidi was quoted as saying, because I have something on him here. It said that it had redefined its public sector model, such as it was no longer focused on government ministries, but on the contractors. For how long do you think these banks will be able to stabilize and, despite the shakings that, they're going through right now in terms of the liquidity that they have to keep in their vault? How long do you think they'll be able to? Because like Sky Bank, which is a government bank, in quotes, some state governments use it, some public payments are made, into Sky Bank.
Yeah.
Do you think it can really survive without these?
Yeah, absolutely. Why? It should survive. I mean, it's not as if all the business, it's not as if the public sector business is such a significant aspect of the business such that it's so material. No. What has happened, and that is why most of what you see, First Bank, Sky Bank, you can see the numbers are huge, but in other areas across the sector, you've seen that these drops are still within the single digits, what we've seen. But particularly in terms of the landing, I exactly don't agree with Rotimi if you say the 100%, because I knew this was going to be big. I figured this was going to really be big. The effect of this was going to be big. So the 50% first, then 75%.
There was
and then
actually
they capped it.
there were actually insinuations that the central bank
Yes,
could
it was going to go to
100%.
100, but that was going to be outrageous. You see, we're saying that now the banks are going to be able to adjust, over time, over a 6-month period, a 1-year period. Remember, this thing started almost a year ago, but we're beginning to see the real effects now, and this is going to take a little while still. So yeah, 100% eventually it will be, but you have to allow, because they're going to take costs. You're not taking costs away from them. You're cutting down all the income lines, by regulation, but you're not also cutting down the cost by regulation, because you can't do that. So you have to allow them absorb costs over time while the income lines are dropping, absorb costs, and then eventually, nil out. Okay, so I think that drop shouldn't be, which is okay from in my assessment. Those who are heavily exposed, you have your First Bank and Skybank. Yeah, they will deal with it. First Bank has already done a lot to deal with it. Yes, Skybank will deal with it. No, they can't go. They can't be thoroughly affected. It's going to be a short time.
Okay, Rotimi, let me come to you. Now that the elections are drawing closer and closer by the months, 2015 general elections, some state governments are holding elections. Some states are doing gubernatorial elections at the moment. And now that we will face the 2015 general elections, a lot of liquidity, a lot of money will be released into the system. And some of these monies are expected to flow through the banking sector. And now, do you think that with what is going on right now, the banks can do without those funds to run their businesses? Rotimi, I want Rotimi to look at that.
Well, I think the most important thing we need to note is that at every point in time, banks will always do better with more available funds.
Yep.
So if there's going to be a further cost down, it's definitely going to affect them negatively. And I think in view of the forthcoming election, we're definitely going to increase the money supply within the system. I think it's more of the reason why CBN has put into place what we're already seeing. And as such, I believe there's still going to be more money supply. And that is why I'm even envisaging whether this CBN may increase that band of 75% to 100%, maybe if the need arises. But it may not really eventually come. But I think that there has been enough adjustments in the cash flow within the system right now for you to envisage further unnecessary money supply. And I think it won't be just the reduction in the CRR that is going to be the main thing that the government is going to use. They may turn out selling more treasury bills to the various banks for them to be able to stabilize the system. So I don't really think it's going to cause much of a roar by the time when we arrive at that time.
But treasury bills sometimes, while the central bank may sell treasury bills, when they're maturing, they have to still pay back this fund. So that is like, having some kind of money for a little while, then later you have to return them from where you got them from. So it's going back to square one. It's
always a cycle. And I think they always do it so much in such a way that by the time one crystallizes, one will already be set in place.